Yo, what's going on? It's your boy Chike Investing here, and we're going to be going over ICT's simplest model that you should be utilizing in 2025. Okay, we're going to start off by going through a top-down analysis from the previous week, or from the weekly time frame all the way down to the 1 minute. We're going to identify, draw on liquidity, right, where we could be targeting. We'll talk a little bit about SMT reversals, and then most importantly, right after we get down to the 1 minute, that's what we'll be going over this ICT model that I utilize and leverage on this channel that you could have leveraged to make so much money today. To be very honest, there's two really good trades I'll be going over in this video. Make sure you stick to the end so that you don't miss them. This is a NQ daily review series as well as an ES daily review series that we do on this channel, futures that we post every single day on this channel. So make sure that you're following along. And without further ado, let's get right into the video. If you like what you're hearing so far, make sure you press that like button. Also subscribe, press that notification bell, and also leave a comment below if you have any questions along the way. Lastly, free Discord below as well, where you can ask me any questions. And we have some other content in there that's going to be pretty good for you to be watching on a daily basis. So without further ado, let's get right into the video. Now, let's cycle all the way back to the weekly time frame. Now, today is Friday, right? Today is Friday, and we had a pretty interesting weekly candle. So in the previous weeks, I was mentioning about how we were stuck inside this weekly FBG BISI, right? Let's actually put this on the weekly here. This weekly FBG BISI, right? Buy side imbalance, sell side inefficiency, right? Fair value gap. So look at this fair value gap. The gap between this candle's high and this candle's low. It's just the body of this candle. That is one of ICT's, I believe, is it 83 or 84 PDRAs, right? Where depending on how price interacts with it, it can give you a narrative as to where price is likely to go. Now, you can see in the first couple of weeks, we were closing in the upper half of this weekly FEG. And what I said is that I'd like to see us either expand away and come out and take out this high, right? Going from this IRL to an ERL. IRL is this FEG to this external range liquidity. Or I'd like to see us break through and close below this weekly FEG BISI. Now, there was actually some price action on the daily and the 4 hour that made me lead to the inclination that we were probably going to close below this weekly FEG because time is fractal, right? So yes, higher time frames trump lower time frames, but sometimes lower time frames can give you an inclination of what's about to happen on a higher time frame. So we're going to go over that as well. Also, don't forget to like the video if you like what you're hearing so far, and leave a comment below if you have any questions. All right, so now we can see that the weekly candle closed well below this weekly FEG BISI. It also closed below these two volume imbalances, right? Volume imbalance, right? It's kind of like the opposite of an FEG. It's just the difference between this candle's close and this body's open, right? You can see that there's no body of candles here, right? There's no volume from, like, basically bodies of candles really indicate a lot of volume. There's no volume in between these levels. Like, you call it volume imbalance, right? And it's just these wicks. You see the same thing over here. And price ended up closing those through in, right? So we won't need these anymore going into next week, because once those been overlapped, price doesn't really interact with it. It could come back and tap on it and run lower. But that's the one thing I'd actually be looking to see. So maybe I'll keep this one here. This one really don't need anymore. But for the purpose of today's review, we'll keep it on. And you can see we ended up attacking this low, and this low over here, these previously weekly lows, and taking out tons of pools of liquidity today, this Friday. Now, let's go over the daily profile. Now, the daily is where we start to get into why it was likely for that to happen in terms of closing through the weekly FEG. Now, if you notice, right, we had a seasonal shift, right? So every 3 months, right, or every quarter, there's typically a change in direction, right? And so you see coming into January, we had a change in direction, from our previous bullish move in the last quarter of the year, right? You see starting September all the way up here to December, we were in a uprise. Now, that means longs were really some of your best trades here. Now, here, you can notice that we're actually starting to retrace on some of this move because we had a quarterly shift where you had this high that broke out above this high, and you have this low, right? So you have a purge liquidity above this high. We continue to go higher, and then we take out this low. That's the first break of market structure, right? Which is telling you that we're having a change in the state of delivery, where price is likely to now go where price is now likely to start going bearish. Why is that also the case? This is an FEG over here to the right, right? And if you see, this is what we would call an intermediate term low, because an intermediate term low is one where if you react to a fair value gap and the price continues to go higher, that becomes an intermediate term low that should not get broken unless we are going to change the state of delivery, right? So we're going to start going lower. And so you can see now price takes out this ERL, right? Or intermediate term low, and also what you can call an external range liquidity, right? It takes out this external range liquidity and it comes back in to the internal range liquidity, which is the fair value gap, right? That's the next draw on liquidity. And then it runs lower, ends up taking out this low. So now we've had another break market structure heading lower, right? So clearly we're bearish. Price comes back up to this fair value gap, and then we run lower again, right? So we are making lower highs and lower lows, right? That is clear bearish structure. Now, what would that inform your trading for today on Friday, right? That we're probably going to take out this low because we came back up to this fair value gap, right? That's the return back to the IRL, and now we're going down to the ERL, right? So, showed you a couple examples of that now. This way you can start to see market maker sell models as well, but I'm not going to go over that today. That could be a separate video. And one thing that's pretty interesting on today's candle. Oh yeah, what I was mentioning is why I anticipated this weekly value gap to get traded through, and that's because of what I just mentioned before, right? So because we came back into this daily SIBI and price ran lower, right, breaking out below this low, that's exactly why I would have anticipated that to be the case, because we're clearly showing very bearish price action on the daily, right, and especially reacting at the bottom half of this daily SIBI and running lower. And closing through the constant approachment of this fair value gap BISI as well, closing through this SIBI, through this BISI, and then running lower, and taking out this low. And then also we have a quarterly shift, right? That's supposed to be bearish as well. So I thought it would be more likely that we actually trade through this fair value gap, even though we struggled to do that in the beginning of the year, right? And so now that we're outside of this weekly FVG, I do anticipate to see cleaner price action. I do anticipate to see these lows get taken out now, and come back into this daily fair value gap, right? Or it can come below these lows. This lows over here, and there's a fair value gap down below here as well. So a lot of targets going into the new year that I'll be looking to see on shorts. If you're an equity trader, this is not financial advice. This is not financial advice, remember. But let's just say you're trading on a demo account, taking loans right now is going to be something pretty risky. Now, because we did purge the liquidity below here, we could see us reverting back to this SIBI over here at some point. So that would be, now that we've taken out ERL, you could see us, especially now that we closed above this low, we purged it and then closed above it. I could see us now rejecting it to go back higher here, before we end up running lower again. But that's just something I'd like to see going into the future. But anyway, on this daily candle, we took out the high of this candle, then ran lower, and took out the low. So this is also a classic daily reversal profile, right? Where price will take out this candle's high and then run lower and take out this candle's low, because that's a purge of the candle's high just to run lower, right? Clear daily reversal profile. So if you see, like, for example, we're above this previous day's high, but the longer term time frame is bearish, right? Then if you see a break of market structure on the lower time frame here that affords you an entry to go short, that would be a great trade for you. Now, on the 4-hour, you see not too much price action over here. One thing I just want to call out is I've been talking about this for a few days now, but it's this 4-hour wick, right? You can see that we've been struggling to get through it. It was not until about the morning session today that we were able to smash through the wick from this particular candle right here. How did I choose that wick? It's just the largest one in the area, right? And so the largest and lowest one, so I like to choose that because then the following candles are really reacting off of this wick. Price comes into first of all, it didn't move too much overnight, so that allows us to move a lot during the AM session, right? If you see a lot of movement overnight, it's why you don't want to trade the AM session. AM session is a good one to trade today. Ends up purging the liquidity, right, above this previous day high, as well as all these LRRs. And then this is what you call a continuation purge, right? A purge above recent highs just to run lower, right? So we're continuing lower, closing below these lows, and this low pretty aggressively, which should tell you that we're probably going to see some more bearish price action to, in the next candle, which is what you saw here. The next candle, we ended up taking out the previous week low below here. And then we purged that and then reverted higher, okay? And came back and tapped this old low over here. And then ran lower post PM in the PM session again after reversing in the lunch session. Now we'll go over that on the smaller time frames. On the 1 hour, right, purged above this high, wicked lower, right? So this is a rejection candle, right? Rejection block candle that tapped a 1 hour BISI or 1 hour SIBI from over here, right? Tapped the lower half of that, ran lower because we're bearish higher time frame, and you're seeing this particular wick here. This is just show confirm to you that we're still on side. Going into 8 a.m., I believe we had news on Friday, right? Yeah, we had NFP and 10 a.m. news as well. So NFP probably starts slamming lower, right? Continuing, and a lot of times like NFP, like how you'll know that it'll slam in your direction is if we've purged liquidity before that before the news comes out, right? And so the news will likely be a continuation of that move, right? Rapidly. So that's the only times where I would afford myself to get into a particular news trade. Price runs lower, and ends up taking out that previous week low over the next subsequent series of candles. Then there's now SMT between these lows. We'll talk about that below. We'll talk about that a little later. But what is SMT? It's a smart money technique reversal, right? So basically, ES ended up taking out this low of this candle, this 10 a.m. low, but we never took that out on NQ. And honestly, admittedly, I did not see that at the time. I would love to have seen that, but I didn't see that, and so I was holding a short and wondering why we weren't taking out that low. But that's typically, if you're wondering why you're not taking out a low, it's because there's probably SMT with ES. And so ES had SMT, and that's why you see that over the next couple of candles, we reverse higher, very, very aggressively. And then we fail to come back into this 1 hour SIBI and start reacting lower going to end the week. Now, it's also Friday, so I'd like to talk about a particular PD array as well. Before we get into the 22 model that I talked about, right? Just be patient. We're still going on higher time frame analysis, right? This is important. Maybe a lot of information at once, but if you're taking notes, trust me, you'll learn a lot. But we're also going over TGIF, all right, as well. So let me just put the TGIF over here. TGIF, and let's change the coordinates over here. It was, what was it? 181 1/4, and all right, I'll send that 1/4. So basically, TGIF is like is the 20 to 30% range of the weekly candle that typically price will close back into or return back to into at some point during the Friday range. And so you see that we do return back to that green zone that I just put, right? This green zone right here, this one right here, and I can actually make it a different color, so it's not confusing with the volume imbalances from the weekly. So you can see we do return back above that, and then we end up running lower because we're still obviously bearish. And when did that reversal happen? 11 a.m. You can see beginning into the lunch hour. Lunch hour starts to go run higher, right? And reversing a lot of the LRI movements that are here on lower time frames, and then taps an old low, runs lower. On the 15-minute, okay? So this is today's opening range gap, this level right here. What's the opening range gap? If you go to RTH, it's basically the gap between yesterday's close to today's 9:30 open. That is a PD array. A lot of times when you see price leaving that open, then the next subsequent candles are going to be very, very bearish, right? If we don't return back to it in the first 30 minutes. And typically on a day like this, because it stayed open and we didn't show willingness to return back to it, price would likely continue to fall until it gets to its target. But look at when we got to the previous week low, price reverts pretty aggressively, right? Because this is the major target for the week. That's that ERL target on the daily, right? That'll complete that MMSM, right? And so price ends up running lower and then reverts higher, returns back to this 15-minute fair value gap SIBI, runs lower again, fails to take out this low because of SMT with ES. And then starting at 12 p.m., price runs higher, right? After a pretty lackluster 11 to 12 p.m. hour, runs higher, takes out that 10:45 a.m. high, returns back to the old lows, and it's now inside that TGIF range, not getting back to the opening range gap because we are around that 20 to 30% TGIF range. Price just does not show willingness to go back all the way up there and reverts lower. Ends up having a lackluster afternoon after a very robust AM session plus lunch session. Typically, it'll make for a pretty lackluster PM. On the 5-minute, right? This is the previous week low, right? So at this point, when we have this NFP move, we still need to take out this previous week low. So I'm still looking for shorts till we get there, right? That's my draw on liquidity. Price runs higher, and then forms that opening range gap at 9:30, immediately shoots lower. I see candles like this. I'm thinking we're not going to fill this, right? We're probably going to run lower and head for our draw on liquidity. Price creates a bearish order block here, retraces into this redelivered rebalance price range, runs lower, retraces into this redelivered rebalance price range on the 5-minute, and then attacks the previous week low. By about 10 o'clock, we've made our low for the day. Price runs higher immediately after taking out the previous week low, and then runs lower again, going into the 1050 macro, fails to take out this low. ES ends up taking out this low, consolidates from 11 to 12, and then starting that 12 macro, price runs higher, and then forms the PM session high here at 155 around that low, and this old fair value gap. It's now an inversion fair value gap. I believe that's a fair value gap on the. It's a 1 hour fair value gap. 1 hour inversion fair value gap, and then price runs lower, creating this FEG SIBI, reacts in the bottom half of it, right? When you're reacting in the bottom half of PDA raise and you're not showing a willingness to run through it, typically will show you that we're still bearish, right? So we're closing in the lower half of this SIBI right here, and we end up running lower to end the PM session, right? I would not trade in this time at all, though, because we had a really busy lunch and really busy AM. Now let's get to the 1 minute. Let's get to the juice and the meat of today's conversation, right? Because this is where we're going to start talking about the 22 model. Now, the 22 model, very simple. Now, this is the model, even though it's called 22 model, it's still very, very relevant in 2025. And by the way, if you like what you're hearing so far, press that subscribe button. If you've learned anything, press the subscribe button. If you learned anything, press that like button. And also leave a comment below if you have any questions. So 22 model is when you make, let's say you make a low right here, and then you purge that low, and then you break market structure higher, right? Because this is probably showing bearish price action, right? You're probably making a low, series of lows, right? And then price purges this last low, goes higher, breaking market structure, and then there's a fair value gap, right? Price runs to it, and then goes higher. Now, sometimes it doesn't always go back to that fair value gap, and I'll show you examples why. Either this video or other videos, you'll see that come out throughout my series on this channel. But most times you're going to be aiming for that fair value gap. So let's talk about as soon as the 9:30 open happens, right? So what's transpired so far? This 8:30 a.m. wick, right? When you have a big 8:30 a.m. candle like this, and it creates a fair value gap, ICT typically says either one of two things will happen, right? So like typically when you have news, you'll either see a Judas swing and then a reversal, or you'll see a big fair value gap that forms, price returns back to it, and then it runs lower, right? Now, we're anticipating bearish price action because our draw on liquidity, right, is this previous week low. So that's all we're focused on, right? And higher time frame on the daily candle, you're going from IRL to ERL, right? So we're looking for the next external range liquidity, which is this previous week low. Now, we're waiting for a return back to this fair value gap, right? Because ICT says it'll return back to fair value gap. So going into 9:30, which is typically what I would wait for, especially if you see choppy price action like this, right? Just wait until 9:30 to take an execution, right? I wait for us to come to 9:30. We have this opening range gap that forms, and it creates this big bearish candle. I'm thinking this is not going to get filled. Price is now returned back to this NFP fair value gap. It's also purged this high right here. Also purged this high, right? So you have this high got purged by this high, also this high as well. Break of market structure, lower. Fair value gap right here, which is really a BPR because it's fair value gap here as well. But fair value gap right here, let's just focus on that one. Price returns back to it and then ends up running lower. And you can see we just continue a series of lower lows, right, until we get to that previous week low. Now, that is the ICT22 model at its perfect timing, right? Because you have time of day, 9:30 is typically a very volatile time of day, so you're expecting some price moves, right? And then you have the 22 model that forms, and you have a drawn liquidity that's very clear, and you're in line with where price is going to go. And you have confluencing factors like this opening range gap staying open, right? And so this is like a very, very perfect ICT22 model example. I honestly did not take it because I don't like to take around 9:30. But in hindsight, because of the context of what was going on, this could have been a pretty half decent trade to take. Now, now we've hit the previous week low at this point. Now you need to search for our next 22 model. At this point, once you take out the previous week low and it's Friday, now a lot of times you can just close your chart and be done for the day. But I hadn't entered a trade, so I was waiting to see if I could see something super clear. Now, admittedly, I did take a trade where I thought we were gonna, come back into the range, and maybe take out some of these LRRs over here, possibly come back to this opening range gap. In hindsight, that doesn't make any sense, right? That opening range gap is likely to stay open at this point, and but we have reached the PDRA for the day, as well as now we've taken out its ERL, we could return back to that IRL daily SIBI above that I mentioned earlier in the video, and so I'm thinking, okay, we could be bullish. We have this low, high, lower low, great market structure, but you see we wick above this high right here, purge liquidity and come lower. So we ended up breaking market structure because we're still bearish. And admittedly, that's not something I'm super confident about. But I've been in enough scenarios where at this point I've noticed that if the market's heavy enough and it's showing you that it wants to reverse on you, so I ended up taking a loss below this low, that I could probably get back in because we closed below this low pretty aggressively, right? And we have a lot of this trend line liquidity here that retail is thinking is pretty safe, and we're in a key time of day, 10:50 to about the noon session. Price makes market structure lower, ends up returning back to this fair value gap, which is where I entered, right? Because this is the 22 model, high, low, higher, high, break of market structure, fair value gap. Price returns back to it, and I'm not anticipating us to come up to these higher fair value gaps. Why? You have this inversion fair value gap right here, right? The price returns back to, plus this breaker candle, right? This series of candles right here is a breaker on the higher time frame, right? And so I'm not anticipating to come back up here, especially with how heavy the market seems to be. That opening range gap staying open. Price returns back here, runs lower. Let's take out this low, which is my ultimate target, and that's just because there's SMT here with ES. Now, at this point, once we've moved a lot like this, going to 11, like, unless we took out this low, I wasn't really confident that this could be a 22 model to retrace the daily range, right? Because 11:30, starting at 11:30, that's when the lunch market could kick off. But we've moved a lot, right? And the next time cycle is really starting here. At 11:30, right? The next 90-minute time cycle, and I'm waiting to see this low getting taken out before I want to take out any longs, but ES ends up taking out that low over here. But as you can see, even on ES, low, high, lower low, breaking market structure higher, we purge above these equal lows, right? You don't want to see a return back to fair value gap. You don't want to take that, right? Like this is clearly a purge, right, of liquidity above equal lows right here, equal highs. Price comes back, and you can see that it ends up taking out this low. Right, that's not the kind of price action I want to see. I want to see something a little bit more similar to this. Low, high, lower low, breaking market structure above this high, right? We still have this liquidity above here. Price comes back to this fair value gap. Even though it kind of reverses on you pretty aggressively, it stops at this breaker over here and starts running higher for the rest of the session. And when does it happen? Between the 12 to 1 hour, right? Because you had a pretty lackluster 11 to 12 a.m., 11 a.m. to 12 p.m. Clear liquidity and clear direction is just in one direction, previous 12 o'clock. And so the lunch hour is likely to reverse on all that move, right? And so you can see during the lunch hour, we end up running higher. That would have been a pretty good 22 model to take. And that's pretty much it in terms of 22 models that formed today. NQ didn't really have any more after this. Made the same move and came back up higher here. And then over the PM session, just consolidation. Not really something you should be worth taking. So hopefully this video was helpful in some capacity. If you learned anything, press that like button. Make sure you join that Discord below and leave a comment below if you have any questions along the way. And subscribe. See you guys in the next video.